after an almost uninterrupted move up through the first quarter of 2012, stocks have pulled back a little bit in April. Volatility has returned. Investors worried about earnings, worried about the global economy. Fred Tomczyk of TD Ameritrade, tell me what you're seeing in terms of investor sentiment with the many customers, trading stocks, ETFs every day on your site.
Well, they're still they're very much interested, and we see logins up and people checking on their accounts, but right now they're still pretty cautious. The volatility should help, but it's helping a bit. But we need to see more volatility for the active investor to get back into the market in a more aggressive fashion right now.
That is interesting. Was there a pullback in the first quarter when it was fairly easy, the proverbial case of throwing a dart at an old stock ticker and odds are it probably went up?
I think a lot of the retail investor basically sat on the sidelines and watched it. We look at our customer base in three segments. If you were advised by an independent registered investment advisor, they put you in the market. You took advantage of the uptick in the market during the first quarter. If you were an active investor, there's really been very little volatility. And so there's not much to trade off. But if you're a long-term investor, and you can see this in a variety of sources, you're still pretty cautious. Your aversion to risk is still high. There's a lot of uncertainty out there. They continue to invest in bond funds versus equity funds right now, and you see that in industry flows.
Was wondering also, how has the advent of social media, if you will, being an important source of information for investors, how has that impacted trading? I mean, you look, for example, on Tuesday, a big story after there was a cow diagnosed with mad cow disease in California, and almost immediately on Twitter and other social media sites, you saw people chatting away about the COWETN and the MOO ETF and what this might mean for agriculture prices. Is that something that benefits sites like yours?
It definitely benefits us. It certainly can't hurt. It's another source of information, and it's another way for individuals to talk to each other about what they see going on and their views about the market and where investment opportunities or trading opportunities are. We have our own social media site called Ameritrade that has about 40,000 people on it. And so they're definitely talking to each other about trading opportunities.
All right, to wrap up, I was wondering, we're nearing the 2-year anniversary next month of the so-called flash crash. A lot of people wondering if that's something that could happen again as there are more high-frequency trading programs out there. Are you worried at all that this may be a recurring problem for the markets, if you will, or was that a one-off?
I'd like to think it's a one-off, but you can never say it can never happen again. I do think some of the things the stock exchange or the SEC has done on circuit breakers, we would be big advocates of limit up, limit down, which we think will result in less stoppages and starts of stock trading. So I think they put in a lot of mechanisms to try and prevent another event exactly like the flash crash. But whenever you have a market that has that kind of volume going through it, and you have high frequency people and you have market makers, I think there still is a lot of work to get the market structure right from our perspective to protect the retail investor.
Great. Thanks so much for joining me from the floor of the NYSE. TD Ameritrade recently moving over from the NASDAQ to the NYSE.